Hi guys, this is Simon with Trade and Perform Coaching, and I am the trading coach and mentor for Trade and Perform. So, wanted to go over why the 200-day matters, and Apple gave us a great example of that today. So let's jump right into it. As you can see, this is a very simple daily chart right here, and we have the 200-day moving average floating right across here, and as you can see, we definitively broke it today. Paul Tudor Jones has one of his trading rules is very simple, which is, and I believe I read this in the Market Wizards book, but quite simply, if a stock is above its 200-day moving average, he trades it to the long side. If it is below its 200-day moving average, he looks for opportunities to the short side. Very simple, very straightforward, and probably very, very good advice. So let's look at what happened today. Obviously, 120.86 is where the 200-day moving average was. And when we go in and look this morning, let's just break this down very, very quickly on a 5-minute bar. And what you'll see here is that this, recall that well, I put it at 120.82, but it's 120.86, was the 200-day moving average. We can see here that when we opened up, responsive buyers tried to drive it higher, holding above the 200-day moving average, and tried to get a rally started. Responsive sellers stepped in here, and here's where the damage came in. It wasn't the responsive sellers. You can see right when we got to the 200-day moving average, they attempted to push it back up. 5, 10, 15, 20. We break below on these 4 bars, right? Now here's where the critical test came. We closed back above the 200-day moving average. Traders think, bam, I'm in good shape. I'm going to get this thing to hook and push to the upside. Instead, responsive sellers stepped in quickly. One of the key readings here was the fact that, see where the body of these bars closed, and we were unable within the first 10 minutes of the day, and we were unable to trade back above those. There were no responsive buyers back above. We traded back below the 200, held below the 200 for 5, 10, 15. Finally, at 20 minutes, we broke, and you can see sellers slowly started pouring in till finally, as we came out of New York lunch, the doors really broke open and we got long liquidation to the downside, right? And so, first of all, that denotes the importance. This line here, and let me see if I can move it really quickly, and I can see I'm already over my 2-minute limit that I was setting for myself, so I'm going to go very quickly. I had intended to, let me see if I can do this really quickly. This was the body of where the first 10-minute bars closed. So again, I want to go through. Break below, hit the 200-day moving average. Responsive buyers unable to generate any interest back above that 121.25, right? And once we were unable to generate responsive buyers back above 121, the price action here, right? What does the price action tell you? That there are no responsive buyers. The counter rotations are little to none relative to the amount of rotation down. Hit the 200-day moving average. Responsive buyers try to step back in, failed, tried to get back above, closed back below the 200-day moving average, and then long liquidation ensued. And we never really recovered. At the end of the day, the recovery was tepid at best, and even when the NASDAQ and the ES were rallying into the close, Apple was unable to follow. I want to show you how that correlated today with the indexes, right? This breakdown where we finally kind of sealed the door on the breakdown occurred right at 11 a.m. and Apple is heavily weighted in the NASDAQ. And take a look at what happened on the NASDAQ today. This is that same time period, and you can see here's 11 a.m. Notice that the market, while Apple had, all Apple had to do was stabilize, right? And you can see right here, I want to draw the counter for you. Apple stabilizes between where? Between 9:45 and really, let's just call it 11 a.m., just prior to 11 a.m. So let's call it 9:30 to 10:45. Look at that same period. This is my NASDAQ chart for the day. that same period. Here's 9:45. And here's at 11 a.m. Notice, as soon as the sell pressure, I'm going to open that up for you so that you, particularly my coaching clients and my guys that I mentor, as soon as the selling pressure came off on Apple and it stabilized, all I had to do was stabilized. Look at the buying pressure that we got to the upside on the NASDAQ 100 as a whole. As soon as selling pressure resumed, this is 11 a.m., selling pressure resumed on Apple, and you can see we got the hard roll to the downside once everyone realized that Apple was indeed trading below its 200-day moving average, and NASDAQ 100 followed suit. And when the NASDAQ followed suit, that led to ES again in that same time period, right? Here's that 11 a.m. Apple's rolling below its 200-day, and then of course late in the afternoon, the downgrade of the EU did not help things, but Apple's what really got things started. So when everyone tells you the 200-day is important, it is important. When a stock gets there and it's unable to get a responsive buy back up, sellers will step in and drive it hard to the downside. So it is worth keeping an eye on what stocks are trading above the 200-day moving average and when stocks are trading below the 200-day. For me, as long as Apple's trading below its 200-day moving average, I would be looking for trade location to get short. If I were a buyer in Apple, I'd want to at least wait till it gets back above its 200-day moving average and then look for pushes back to the downside, but giving me trade location that is above the 200-day with my stop sitting just below the 200-day moving average for alongside trades. Or I can be very patient. Stocks can fall significantly when they get below the 200-day moving average. And it is my belief that the stock will tell the story long before the fundamentals do. So anyways, my name is Simon. I'm with Trade and Perform Coaching, and my goal is to help traders become better traders. Anyways, everyone have a great night. I ran over at 7 minutes, and I am working on getting these shorter and shorter. Talk to you all later.